Craig Zelzer from PCDN with another video about how to better link your career of impact, your personal values, and your personal finances. We've talked a little bit how important it is to think about, if you want to affect change in the world, how important it is to not only look at your own personal behavior, but look at your relationship to money, both in how you save money, if you're fortunate to have some leftover, how you invest that money, where it can grow, and where you park that money. But one of the things I want to talk about today is I've seen many people overlook the cost of fees that financial institutions will charge you for holding or investing your money. A fee can be anything. If you have a bank, a savings or a checking account, that banks will charge you a couple of dollars to take out money out of the ATM. If you are buying or trading stocks or bonds, some places a broker might charge you fees for trading those stocks each time you make a trade, or that's becoming less common. There's more and more institutions that provide free trading. And then particularly where a lot of people put their money for investing for the future in terms of retirement or long-term investing, they can put it in individual stocks or bonds, but they might put it into exchange traded funds in the US or mutual funds, which are groupings of stocks usually in a sector or diverse area. So one of the things I found many people don't look at, let's say you're fortunate and your employer provides some matching funds. So let's say you're making $50,000 a year and the employer provides you 5% matching, where they'll provide $2,500 a year to your retirement as long as you put in some money. So let's say you're fortunate to invest $5,000 or $10,000 a year for your future retirement. Most employers, at least in the US and a lot in Europe, will say you can invest those funds in a range of mutual funds at a provider, such as Vanguard or Fidelity or T. Rowe Price. Most people only look at where those funds are invested. So first of all, it's really important to screen, to look at, are those funds investing in extractive industries, defense companies, or war companies, gambling, tobacco, to try to screen out for those negative things and try to go more positive. We'll talk about that more in future videos. But one of the really important things for your own personal financial well-being is to look at the fees financial institutions charge you. So for example, a lot of mutual funds, again, those are collections of stocks or bonds. You might buy like a mutual fund that's invested in the tech industry or sustainable energy. So it's like it can be a collection of 10, 20, 100 different companies that are pooled together, and you buy like a share in that pool. So you might look at the overall investment and look at the potential returns. But it's really important to look at the fees that the mutual fund company charges for investing your money. A lot of mutual funds can have fees ranging from 0.5% to 2% or more. And when you think about that compared to a mutual fund that has no fees, or let's say 1/10 of 1%, over the lifetime of your investments, those fees make such a huge difference in money you're losing for no benefits. So for example, Vanguard, I'm not endorsing any particular financial institutions, but Vanguard does tend to have low fees, and they have a statistic here that I'm looking at. Let's say you invest $100,000, you're fortunate to have some money. Over the course of, let's say, 25 years, if you get a 6% annual return, so that means each year, $100,000, you get first year 6,000 in returns, you have $106,000, you get 6% on that. So for 25 years, you would make $330,000 in kind of returns plus your original $100,000 investment. If you invest that in a mutual fund company or some other financial vehicle that charges 2% a year in cost just for investing your money, which is not too uncommon, you would actually only get $160,000 extra in return. So meaning your net return would be $260,000 compared to $430,000, all because of fees. So it means you're losing out on a potential future income growth of $170,000. So one of the things I strongly recommend to start your financial literacy or to increase it is wherever you park or invest your money, look at the fees those institutions are charging you. For example, I live overseas, and our US bank account, where we hold our US bank account, we are reimbursed for taking out money out of the ATM machine. I think up to 5 times a month we're reimbursed. So if we're taking money out, which we don't do very often because most things are electronic these days, but they often charge $4 to $5 if I'm not using their bank, or most banks do that. So that could be up to $20 a month you're losing in fees, $240 a year, versus if your financial institution reimburses you for any of those ATM fees, which are ridiculous to charge you that much money for accessing your money. So really, most financial companies, you got to look at the statements or look at the investment prospectus, but please, please look at where your money's invested. And if you're paying unreasonable fees, particularly to an unethical financial company, you're really losing out and not doing the smartest investment of your money. And Vanguard also found that research on mutual funds that have higher cost funds generally also underperform, so they perform worse than funds that have lower fees. I'll say that one more time. So funds that charge higher cost generally underperform lower cost funds. And as they explain, that's because fund managers who charge these extra costs usually can't generate enough value to justify it. So this is just a short tip. You've really got to dive into your own things. But if you work, at a university, a private sector company, a nonprofit, don't just park your money easily. Like, invest both the ethics of where the money's put, but really, really look at fees and try to find alternatives. Generally, in my opinion, if a mutual fund has a fee over 0.7%, even that's high, but if it's over 1%, there's very little that can justify that these days. And it's often better, again, you've got to make your own informed decisions, to find investments that charge low fees and are ethical. So that's another tip for this week. Thanks for watching. And please let us know, what are your questions on linking your personal finances and your change-making career, your favorite resources. Drop us a note, a message, and we'd love to hear from you. Thank you very much and have a great day.